Hi guys, welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita Khemka. Well, another choppy session today in the market. In fact, this entire week has been extremely choppy. Lots of troughs and crests. If you look at the 5-day chart or Friday to Friday chart, extreme choppiness in the market. Although we did see a good recovery coming in on the benchmarks at least over the last two sessions, but today we have snapped out of that as well. And it was a day of breather for the mid and small cap indices yesterday, but today again they resumed the sell off and clear signs of pain visible in the broader market as well. Third straight week of losses for the market, and towards the end of the session we did clock a triple digit cut on the index. In fact, below that 23,100 mark. As of now, a 113-point cut coming in on the headline Nifty index. Cut across broader end of the markets were much cuts rather across the broader end of the markets were much deeper. With the small cap index down almost 2.5%, the mid cap index down 1.5%. The breadth extremely poor, 1:4. That's the NSE advanced decline ratio. Almost 500 stocks advancing to 1980 declining stocks. So yes, that's the kind of pain that we have been witnessing in the broader end of the markets. And of course, it's the pre-budget volatility and all the earnings reactions also playing out. Extreme moves, right? Any disappointment and the stocks are getting hammered and punished. And how? If you look at some of the pockets in particular for today, pharma, realty, autos, oil and gas. These were among the laggards. But what stood out in a weak and volatile market were the defensives, FMCG and IT. Those were among the gainers in a volatile market. Taking a look at some of the movers, Dr. Reddy's, that was a big loser on the index. I think it was down somewhere around 5% or so. Operationally strong quarter, but profit miss and concerns over generic Revlimid. The patent expires in 2026. How the company will make up for the revenue loss from there is something that the street is watchful of. Aside of that, trend continues its downward move. A couple of sessions of reprieve we saw over the last few days, but it's largely been on a downward trajectory. Stock is down 35% odd from its all-time highs that it reached in October. And clearly it was a showstopper in 2024, but 2025 hasn't really turned out to be very fashionable for this particular counter. Down 20% on a YTD basis, which is Jan 1 to now. So yes, 20% cut coming in on Trent on a year-to-date basis. Mahindra and Mahindra saw exacerbated sell-off in the last hour of trade. Adani Enterprises, BPCL, Cipla, some of the other counters that were among the laggards. What held out in a weak market was, as I mentioned, the defensives lot. So you had some of the consumption names like HUL, Britannia doing well. Eicher Motors from the auto pack did well. Grasim, got a leg up after Ultratech numbers yesterday, and today once again it was extending its up move, and so was Tata Consumer. That stock was up, and Wipro, Tech Mahindra, Infosys from the IT pack did well. Taking note of some of the movers in the broader end of the market, Cyient got punished and how they have cut their guidance. There's been a CEO exit as well. Stock got hammered 24%. That's the kind of pain or drubbing that the stock saw in today's session. Jupiter Wagons, Tejas Networks, some of the other laggards on the Nifty 500 index. But what did well post numbers was Capri Global and even KFintech, good 7% up move coming in, and so was Laurus Labs, healthy gains after the numbers. It came out somewhere in the last hour of trade or so. Overall texture of the market extremely volatile. As I said, wild swings this week, crazy moves. But how is the setup looking like as we go into the final week ahead of the budget? Well, to understand that, I'm joined by Kranthi Bathini, equity strategist at WealthMills Securities. Kranthi, speaking to you after a very long time. First of all, wish you a very, very happy new year. Although the same can't be said about the market. It has been a roller coaster, so to say. But heading into the budget week, extreme volatility. What is the sense you are getting? Are you gearing up for any kind of pre-budget up move, or do you think it's going to be like this wild ride before the Saturday session?
Nandita, good evening to you. The Happy New Year, as you rightly mentioned, the New Year brought a lot of volatility in the market. And uh, what's concerning at this point of time for the market is the Q3 numbers are not enticing the markets at this point of time. That's where the extra volatility, heightened volatility is getting created at this point of time. The foreign portfolio investors have been the continuously have been the net sellers during the new year. We have not seen any kind of respite to the foreign portfolio investors selling. But thanks to the domestic institutional investors who stood like a rock to safeguard the market. Otherwise, market would have been in a bearish kind of situation. Thanks to we are holding the level of 23,000. As long as we hold the level of 23,000 level in the medium to short term, markets is going to be in a positive territory in the medium to short term. But the major key triggers going ahead in the coming weeks are going to be the budget, which is going to be the Modi, the full-fledged budget for this government. The past budget was not a full-fledged budget, but with respect to the 3.0 is concerned, it's going to be a full-fledged budget for this government. So the obviously there is a kind of a anticipation around this budget, how the capex is going to get revived, and also the measures to kickstart the growth momentum that has been giving some kind of signs of weakness in the past 2 3 quarters. So there is a lot of anticipation and expectations are high around the budgets at this point of time. And India has been perennially, historically, has been maintains a tight liquidity policy in terms of the monetary policy is concerned. So going ahead in the first week of Feb, we are going to have the MPC meet led by the new RBI governor. How the stance with respect to the liquidity and monetary measures are concerned, these are the key things market is watching on that right now. And also we have been witnessing the volatility that coming from the statements of President Trump. So these are the things that are creating the markets to make a seesaw kind of a movement at this point of time. But these are the short-term measures. With respect to the long-term stock picking is concerned, one can hold on to their chips. Any these kind of unusual volatility or any kind of declines in these markets, definitely Indian markets are going to be warranted by any kind of dip from these levels. But Nandita, from here on, it's going to be a more about a stock specific market. Once everyone's stock picking skills are going to play a important role to get the alpha returns in these kind of markets.
Okay, I know you mentioned quite a few factors that would dictate the trend going forward. I will take one of each one of them one by one. But speaking more specifically about the RBI meeting that's in the first week of Feb, as you mentioned, new RBI governor. There are expectations building of a 25 basis point rate cut, especially in light of inflation, cooling off a bit. If you look at the latest data. What is the kind of trajectory you are envisaging for the full year, for calendar 2025? What is the quantum of rate cut, and do you believe that the first rate cut is coming in February itself? Also, would it just be a rate cut, if at all, or it would be a rate cut plus a CRR cut? Because as we know, the system liquidity is extremely tight, and the RBI conducting VRRs on a daily basis as well.
Yeah, the liquidity has been quite stringent in the past couple of weeks, and the measures taken by RBI, the VRR, kind of a infusion of liquidity. But we need to wait and watch uh, with the new RBI governor as the MPC chairman. How the measures, the stance of and mood of the RBI is extremely crucial. I was listening to the statement of the former MPC committee member Ashima Goyal. She have been emphasizing on a immediate rate cut because of the slowdown in terms of the growth is concerned. But the new MPC, how they are going to give the guidance with respect to their stance with respect to the controlling the inflation, and at the same point of time, on the other hand, managing and giving the headroom to the growth, that is extremely crucial. And the Federal Reserve, which has been giving a kind of a unusual kind of a outlook with respect to the rate cuts are concerned, that also has taken a slow pace of growth, slow pace of cutting the
Hmm.
rate cut cycle is concerned. So that's also one of the important area we need to
Hmm.
see. So at this point of time, there India needs definitely a rate cut with respect to the growth prospects are concerned,
Hmm.
and also in the market, the liquidity kind of situation also getting some kind of pressure at this point of time. So definitely we are looking forward for a rate cut. Definitely the first rate cut can be a sentimental booster for the market, and with respect to the growth momentum to take the pace at a faster pace, that is extremely crucial at this point of time. So first and foremost thing is, what is the
Hmm.
stance of RBI with respect to the growth prospects are concerned. So post that, we can think about the further rate cut, because what we have been waiting for a early rate cut that turned out to be the late rate cut. So it is not very premature to assume or predict with respect to the number of rate cuts that are going to be. Let us see the first rate cut, then we can think about the further rate cuts that are going to come.
Hmm. All right. So February, you are penciling in one rate cut, right? The first one.
Absolutely, that is much needed given the kind of the
Right.
growth,
Hmm.
slow pace of growth at this point of time, and the earlier RBI governor, his stance used to be, we look at the data with respect to the India's growth prospects, India's inflation is concerned. We are not going to see whether the Fed is going to increase or reduce,
Hmm.
but as an independent institution in India, we are going to follow the data that coming from India. So at this point of time, we can see some kind of sense of cool of inflation, and the growth has been taking a beating at this point of time. So any kind of rate cut,
Hmm.
definitely it's going to create the booster stroke for the growth momentum is concerned. That is much needed
Right.
at this point of time, and that's quite evident in terms of the
Hmm.
quarterly numbers what we are getting at this point of time.
Hmm. Right. We'll also talk about earnings and how the season is really panning out. But first, what about the broader end of the markets? Signs of pain are clearly visible. We've seen the quantum of sell-off when it comes to broader markets much more than the headline index, right? Most of the stocks or some of the stocks had seen a stupendous run up, and they've all corrected quite a bit, like 15-20% in a matter of sessions. So would you say that the pain is has just started? There is more to come, and if yes, is it time to look at some of those stocks that have corrected quite a bit from their highs? And you were saying that stock picking skills will be put to test. Where does one look for opportunities now, especially in the broader end of the markets that is witnessing a lot more correction than the headline indices?
Nandita, always stock prices are slaves to earnings. And what we witnessed due to the kind of a strong liquidity on Indian markets, especially the domestic led equity, there are many stocks which have been in the momentum zone. So when there is a price momentum that's going on, the price momentum has to take place. The earning momentum also has to take place with respect to the price earnings. Wherever the earning momentum is taking a beating, and if at all it's not matching with respect to the price momentum is concerned, then that's where we are witnessing we are witnessing the correction at this point of time, and also sell off in the medium to short term. So companies with a strong order book and with execution capabilities and earning visibilities, these are the stocks that are going to see the further momentum in terms of the pricing is concerned. The remaining can be the laggards on a medium to short term perspective. So right now the earning visibility is extremely
Hmm.
crucial for the stock prices to sustain.
Hmm. So where are you seeing earnings upgrades? Because the Q3 thus far has lacked excitement, so to say, but good commentary from IT companies is a plus. Industry leader, cement industry leader, Ultratech surprised with good numbers, although other cement makers didn't really make the cut. So where are you seeing upgrades coming in this earnings season? Banks as well, whatever has been reported thus far, the likes of HDFC Bank and Kotak Bank have been fairly good. So upgrades, where are you looking at that?
With respect to upgrades are concerned, going with the infrastructure, the kind of order book that is going to come up, and also the infra spending that's going to kick started with respect to the capex is concerned. So infrastructure looks very attractive at this point of time, given the kind of strong order book these companies are gaining, and also the government vision towards improving the infra spends are concerned, and also defense, which has been in a momentum zone. Still, given the kind of the order book that has been building up, so still with the recent correction, defense space also offers a good value for a medium to longer term prospects are concerned. By and large, the companies which have a strong order book and a strong earning visibility, these are the stocks looks very attractive to us on a medium to longer term basis. Of course, as you rightly mentioned, for an investor with a medium to longer term, IT looks still attractive given the kind of a strong growth prospects US is going to witness. So still, IT is attractive buy with a depreciated rupee, and also strong growth momentum that we are going to witness in US as per the recent commentary by the President Trump. And on a longer to medium term basis, uh, uh, banks are the financial services are the long consolidation. We can see uh, some kind of a uptick in terms of the earnings of the banks, but as we are anticipating some kind of rate cut in the coming quarters, so banks and financial services definitely to for a medium to longer term perspective, we can see some kind of earnings upgrades with respect to banks are concerned.
Sure. Okay, those are the pockets to watch out for: industrials, defense, infrastructure, and banks, even IT for the long term. But let's break it down to some other sectors that have been underperforming. Consumption, FMCG as a pocket, and two, it's the auto pack. After 3 years of outperformance, we've seen autos underperforming as well, right? There are quite a few issues that are plaguing the auto space. Seasonal pressures, higher discounts, inventories building up, weaker product mix. These are just some of the issues that are plaguing the auto sector. Has the story played out for now? Because if you look at the tractor segment, one can argue that rural demand has just started picking up. So should you look at the tractor segment as a space to get in now from the auto basket? Because otherwise all the other stocks have seen a fair bit of run up in the last 3 years, but off late have come under selling pressure. So how would you look at the auto space in light of all these data points?
Nandita, with respect to auto sector is concerned, it's at an inflection point. And one hand, if we look at the raw data at this point of time, we can see some kind of consolidation with respect to the month-on-month auto numbers are concerned. There is a complete clear-cut shift in terms of the consumer behavior in terms of auto numbers or auto segment is concerned, Nandita. Look at India, which is a market for the entry-level segment. Right now, if you observe the number of the India has become a capital for SUV, the center for SUV segment is concerned. So earlier, the pattern and consumer behavior is they to start when a young chap buys a first car in his life. He used to start with the entry level car, and he used to get graduated with a sedan and a SUV. Now the segment has been changed. People are looking forward to buy a mid-range sedan or a SUV. That's what the consumer behavior is right now. And look at when the Thor Rocks they launched their product. Within few hours, the kind of orders they got. And if you call up any automobile dealer of Mahindra and ask for Thor Rocks, they're not clear when the automobile is going to delivered. Okay, that kind of order book they have. So these and if I call up any dealer and ask any car which is in the premium segment of 30 to 50 lakhs, the waiting period, look at some models of Toyota, it is 6 months, 1 year, like that. But this is the consumer shift what we are witnessing. One hand, there is a tremendous waiting period with respect to some segments. The other hand, the demand is not there. with respect to the entry level cars are concerned. So there is, and also the first time consumers are perplexed with whether to go for a ICE engine or go for a electric engine. This is one dilemma. So the demand is in line, but the product mix and also the behavioral change is making a lot of shift at this point of time with respect to the auto numbers are concerned. So we are quite sanguine with respect to the India's automobile industry is concerned. One can pick up names for a longer term perspective. We have a Hyundai Motors, we have Mahindra and Mahindra, and Maruti. They had to launch their EV segment, so it looks very interesting for a medium to longer term perspective, despite of these short term concerns are concerned. And 3 years we had a very tight monetary policy, and autos are pursued as the
Right.
interest rate sensitives. Despite of these tightening of the liquidity, auto numbers are quite good. So after a strong run up of 3 years, it's obvious some kind of consolidation, some kind of a downtick. Definitely, we are going to witness. That's what we are witnessing in the auto numbers are concerned.
Sure, that's the call on autos. But what about FMCG? Because the urban consumption demand slowdown. Evidence of that is still is visible in the numbers. From HUL, for instance, we saw volumes that were pretty flat, and other companies have also pointed out that it will linger on for some more time to come. In that sense, and of course, we have a budget coming. Would you expect the government to roll out measures to boost consumption in the wake of the urban consumption slowdown? And in that sense, should one look at FMCG names before the budget? And if yes, would you look at the discretionary part of it or the staples part of it?
Yeah, with respect to the consumption is concerned, the numbers have been very lukewarm on a medium to short-term perspective. But Nandita, if you observe the trends of this FMCG segment is concerned, as of course definitely some kind of a softening of these numbers, but there are some concerns with respect to with respect to the margins. That's where the big hit is taking place at this point of time. Uh, uh, and there are some kind of brands, the local or the other regional brands also dominating in this space with respect to the FMCG segment is concerned. So definitely there can be a clear evidence of slowdown, but they are also facing the pressure from the unlisted entities also at this point of time, and the heavy discounts offered by the supermarts and also the quick service models, delivery models are concerned. Quick commerce is concerned, also impacting their margins. But for a longer term prospects are concerned, we might be witnessing some kind of slowdown in the medium to short term. But the longer term, we tend to see some kind of uptick in the disposable income, and also margin improvement in this space. It's very interesting to look at. Of course, the consumer space, the FMCG space has been underperforming in the past 1 year, but we can see some kind of a earning momentum to take place in the coming quarters. The one thing is the overall economy has to get tuned in because of this high interest rate environment, and also strong squeeze liquidity is concerned. This is definitely creating impact on the earnings of the consumer
Right.
space in the medium to short term.
Lastly, Kranti, just about a week to go for the budget. What are your own expectations? What would you like to see? What are the markets hoping for? And what would the FI community want to see? Because they have been persistent sellers since the start of the year, and they've pulled out a sizable amount. Every day we see figures of 4,000, 5,000, 6,000 crores being pulled out, in terms of foreign fund flows. What kind of a budget is the entire investor community also hoping for?
Nandita, I don't want to predict from the outcomes of the budget, but what I can sense at this point of time is there should be a greater focus with respect to the capex is concerned, and also the spending is concerned, infra spending is concerned. That's what the clear cut area we are focusing. The other hand, any kind of emphasis towards the taxation and also giving more elbow with respect to the consumption is concerned, that is increasing the slabs of income tax. So these are the things the market is anticipating. This where the build up, the speculation is going on at this point of time. But we need to I'm also crossed my fingers whether market the budget is going to give softs to the market or going to give shocks to the market. I'm also crossing my fingers. But by and large, it is going to be more focused to revive the growth, which we what we witnessed in the first half of the year.
Sessions in terms of taxation as well, and that's on our wish list as well. But with that, I would like to thank you for taking out time this evening and joining us. Always a pleasure chatting, and I look forward to more conversations. Perhaps post budget we can touch base and decode some of the measures that the government would announce on the 1st of February. Thanks a lot for joining in.
Pleasure, Nandita. Looking forward to have the frequent interactions with you, to share my market views with you and with all the viewers of Money
Thank
Control.
you.
Thank you.
Thanks a lot. Well, on that note, we've come to the end of this edition of Closing Bell, and we've come to the end of a very volatile and very eventful week for the market. Although ending the week on a negative note, it's been a third straight week of losses, so to say, in the market, and we've seen big pain or major pain in the broader end of the markets. Mid cap index 2% down, small cap index 4% down for the week. But on the headline indices front, both the Nifty and Sensex are down 0.5% a piece. So yes, we are heading into budget week. The word is either there could be a pre-budget up move or we could see heightened volatility in the run-up to the big event. But with that completely timed out, thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates, and of course come back and join us Monday with the markets. Thank you. Have a great weekend.